Good morning. It's Friday, August 8th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So a lot of green on the screen, a lot of trading activity going on. I noticed a significant amount of trading activity, specifically in the gold market overnight, with gold futures pushing through $3,500 an ounce, testing up over $3,534. If you're trading a product like GLD, you're really missing out on this type of price movement. And given its high price per share, it's much more capital efficient to trade something like the 1 ounce, 10 ounce, 50 ounce, or even 100 ounce gold futures instead. If you'd like to learn more about futures trading here, please send an email to info@bluelinefutures.com or register in the chart pack below. Now, gold is on track for its biggest weekly gain in over a month here, with a slew of U.S. tariffs that came into effect as President Donald Trump also named a temporary Federal Reserve governor who's expected to echo his calls for lower interest rates. Now, overnight, when you look at the equity market, stock futures, they are ticking higher as the AI narrative gets more fuel from Taiwan Semiconductor and then also SoftBank here. However, gold is really where all the drama, the action is here, with futures in New York just in turmoil following that U.S. move to put tariffs on imported gold bars. So looking at gold futures, again, 35, 34, 10. And if you look at the way we were starting to close in the after hours of the futures contract, we were accelerating higher, and it was really naming that next Fed governor here and really a pivot on the Federal Reserve to accelerate those interest rate cuts here starting at that September meeting. But it was the recent decision by the United States to impose tariffs on imports for the 1 ounce and the 100 ounce gold bar is causing significant movement in the market. It may disrupt trade flows from Switzerland and other imported refining centers. So the U.S. Customs and Border Protection Agency clarified that these bars are subject to tariffs and do not qualify for an exemption. That's contrary to what earlier expectations were within the industry. Bullion traders, they had assumed that the 1 ounce and the 100 ounce bars would be excluded from those tariffs imposed by President Trump. And these are including the unexpected 39% tariff rate that's been applied to imports from Switzerland. So he's had a really hard stance on Switzerland over the last week. That's where a lot of the drama is unfolding, and they have the highest tariff rate under larger type of normalized economies that are out there. So you also look at the Border Patrol's recent decision to categorize these items under the custom codes here would be indeed subject to the tariffs here. And this all comes out from a report from the Financial Times, which referenced the letter outlining the ruling. So then you get the Federal Reserve here, where U.S. President Donald Trump named a White House economic advisor as a temporary governor of the Federal Reserve, giving himself another 5 months to decide on a permanent replacement for the bank's chairman, Jerome Powell, which I would expect Governor Waller to take that particular place. And he's been very critical of the Federal Reserve's decision, saying, why didn't we cut in July? What difference does it make between July and September? And then you look at those data numbers that are coming out as far as the labor market, that really shows you that that labor market is softening significantly. So you start to look at other things here like overnight trading and overseas trading. You look at European trading stocks, they edged higher here. They're on track for the best week since May, and it's really a lot of optimism around company earnings, weathering some of the U.S. tariffs in hopes for a potential ceasefire between Russia and Ukraine. And then you're seeing miners and really the automakers are leading the gains. Now, Asian stocks, they are edging a bit lower, but that was more profit taking here after a 4-day winning streak. You look at the flows and the way money's working right now. Bank of America flows notes showed that investors poured about $107 billion into cash funds last week, and that was the biggest inflow since January. So they're booking some of the gains on some of the movement in the U.S. equity markets, and we saw that really yesterday, where we opened up, we gapped higher, we accelerated up, and it was a lot of Chinese economic data that came out with their import-export data, really showing quite a bit of a robust movement. They imported a record amount of copper here in the previous months. Now, something to note is that copper futures had very little reaction and traded most of the time in most of the trading session in lower territory here. That really tells you and sends out some red flags in the copper market at the moment. That comes after that 20% drop. You do have some key mines, some key exporting mines that are producing that are offline at the moment here, and that's the reason why copper futures are just edging ever so slightly higher. higher. But the real action that I want to watch here and continue to watch, again, the silver market, about $1 over our bull bear pivot, which is right around that 37.50 to 40. If you get the chart pack, you can see that that level has been a level of resistance for a while. We broke through it here. We rallied up. We got up just over 39, backed off, retested it, went back up 39.91. Should have broke through the $40 mark at that point, but that was when President Donald Trump, he said that he was going to import, or that they had a trading framework with the European Union lined up. So you saw this risk-off environment in the gold market, and that's what dragged that silver market lower for the time being here. But now futures are ramping back up here, and we really could look to accelerate higher here if we get some more momentum out of the gold market, some positive momentum out of U.S. equities, and we just get this kind of reflation acceleration trade coming up. Because my stance on the economy here is that we're going through stagflation, which is one of the best performing environments for the gold market here, for some of the small caps and things like that, where we start to anticipate that we get the rate cuts. That's where we really go into reflation, and then we go into growth and acceleration. And I think that's where short covering really takes place on a lot of U.S. equities, and we're able to power significantly higher. So if you look at reaffirming the interest rate cuts, if you look at initial jobless claims last week, they came in higher than expected. Now today we're going to see no significant economic data releases here today. And then you finally look at the ETF flows here. Well, gold up about 10% here. The exchange traded funds added just under about 250,000 troy ounces to that previous day's holding. And then you go to the silver market, up 10%. And this is where there was a big boost here, up about 3.35 million ounces were added here yesterday. Taking that number, it's right up near the highest level I've seen all year. And the gold silver ratio sits at 90 to 1. So something else that I've noticed is that platinum futures starting to turn back higher. And as platinum futures really accelerate up, that's been really lifting that silver market too. And there's a dynamic between these particular metals as well, because a lot of platinum's recent flows have been jewelry demand, and one of the cheapest forms of having a very nice metal piece of jewelry is that silver market. And I think as things like gold start to outprice themselves out of that market, that you get the retail person, the consumer that wants that gold watch, wants that platinum watch, things like that, starts to look at other cheaper metals here like the silver market. So I think the floor on a lot of these metals are rising here. And on the copper market, you know, copper long-term structure prices are looking very good, very dynamic to the upside. I talked about on CNBC on how our wealth management side, we own assets like Freeport-McMoRan, where they have that exposure to gold, they have that exposure to copper, and they offer some kind of balance between the two to be on the bull side of the metals markets. Copper futures really need to find their footing here, start to push up, take out some of these recent consolidation range highs, and then really start to have some building going on that's constructive with a higher low on the longer term charts here, because $4 is really that line in the sand and that longer term level of support. But we may continue to press just a bit lower as futures hit some stops. A couple of the markets that I'm really not as constructive on the moment, and that's really the oil market, because when you get these calls from President Trump to push oil futures lower back down into the 50s, he tends to get what he wants at the moment. And if you see some of these dynamics take place where you get that ceasefire between Russia and Ukraine, that could pressure markets like the wheat market, like the crude oil market. We've also got natural gas pushing below $3. Bank of America put out a bearish note on natural gas as well. And then you got Bitcoin futures kind of hovering here just back above that recent, what was support for a while, 116 to 121. Then we broke below 116, went down to 112. That's kind of your next kind of line in the sand. We got down to 113, bounced back up. We're over 116. So old resistance, new support. But a lot of times when futures kind of waffle around these levels here, they're kind of more, they act more as pivots rather than levels of support and resistance. And the pivot is really the stance of, does the trader want to be bullish on the market, bearish the market, or want to exit the market? And that's where I say on silver, it's closer to that 37, 50, 40 level here. And again, if you don't look at the charts really allow you to provide a roadmap, and they also allow you to take some of the emotions off the table. The reason why many traders are emotionally triggered is, one, they're not using technical analysis in order to determine which way they should be trading in the markets here. They're often trying to outsmart the markets by picking tops and picking bottoms. Unless you went to school for proctology, that's probably not going to take the place here, especially on that bottom picking. You look at position size. Position size, when a trader is in the wrong direction of the market and has too large of a position in that wrong direction of the market, that's when they often become emotionally tied to these things. How many times are you checking your phone? Things like that. And I often ask people, what level of comfort on positions does it make you not emotionally triggered here? What's your considered minimum position size? What's your core position size? What's your maximum position size? Your maximum position size is when you're checking your phone 17 times a day, looking at this, disrupting on sleep and things like that. That's when you better be in the right direction of the market, or you're really going to start to lose your hair. Your minimum position size should be where it meets the core theme of things. Like when gold futures were selling off just a couple weeks ago, when silver and copper were outperforming the gold market and the gold silver ratio is dropping, that's when you want to take gold down to your minimum size position. And as things change in a dynamic change, you start to ramp that up to a core position, you ramp that up to an overweight position. Now the overweight position, you want to be picking and pruning and using some things like the tactical ranges in order to take off some of those positions, add them on, but at the end of the day, bringing it back down to your core positioning size. So again, those are the two things, the two mistakes I see most people make. Again, ask yourself, does one contract, is that your core? Is two contract or your minimum, two your core? Is four where your maximum position sizing is here? And at that level here, those should be more intraday small term swing trades with really prudent, tight risk management around those excess contracts here. So that's kind of just a little bit of process that I was thinking about, because I talk with hundreds of people per day here on a daily basis. And again, we want to thank all of our subscribers that have come out and really helped boost our channel. So if you guys got any questions, shoot an email to info@bluelinefutures.com. And remember, futures and option trading, well, it may involve risk of loss and it may not be suitable to all investors. Good luck and good trading.